It's August 2021 here at Henssler Financial, and we found 3 important things to focus on in the market this month. Number 1, the employment picture. For months now, labor market discussions have focused heavily on whether or not federal pandemic unemployment benefits disincentivize Americans from returning to work. As more than 24 states have ended the extra $300 in federal unemployment assistance ahead of the September 6 cutoff, the Bureau of Labor Statistics employment report showed considerable improvement, with 943,000 jobs being added in July, the highest number of jobs added since last August. That being said, the labor shortage isn't over yet, as the most recent JOLTS survey showed that the number of available jobs since May has outnumbered Americans looking for work. The number of people trying to get back into the workforce has rebounded since the early days of the pandemic, rising from a low of 60.2% in April of last year to 61.7% in July, but still remains weak. The hardest hit industries have yet to recover from pre-pandemic levels, when 63% of Americans were in the labor force. In July, there were 5.7 million fewer jobs on a seasonally adjusted basis than there were in February 2020, according to Labor Department data. Number 2, housing. Recent data suggests that perhaps the red-hot housing market could be cooling a bit. Sales of newly built homes fell in June to the lowest level since the start of the pandemic. Additionally, the median price of a newly built home rose just 6% year over year in June, a large gain by historical standards, but a far cry from the 15 to 20% annualized gains seen previously. Existing home sales rose 1.4% in the month, however fell short of economists' expectations and followed 4 consecutive monthly declines, a sign that high prices and low inventory remain constraints. Speaking of inventory, the number of available new homes rose to 6.3 months in June, but permit data suggests that future construction won't be sufficient to meet demand. While housing demand is still strong, affordability concerns, coupled with the prospect of higher rates, will undoubtedly weigh on demand and could mean that the housing market is ripe for a bit of a cool down. Number 3, container shipping rates. Typhoons off of China's southern coast, soaring U.S. demand for goods from China, and an acceleration in COVID-19 outbreaks has driven container shipping rates from China to the U.S. to new all-time highs, touching more than $20,000 per 40-foot container. Spot prices for containers sailing from China to the east coast of the U.S. are now more than 500% higher than just a year ago, and have nearly doubled in under 2 weeks when the spot price was just $11,000. The disruptions have been so great that it has forced companies like Home Depot to contract its own ship, the first time the company has taken such action. While the Fed continues to suggest that inflation is transitory, as it becomes more expensive for companies to get goods, it seems inevitable for the cost to consumers to rise, leading us to believe that perhaps inflation will be around for longer than the Fed has guided. And that has been your Market Minute for the month of August. Thanks for listening.